What is the Federal Reserve? The Federal Reserve, or Fed, is the central banking system of the United States of America. It is the most powerful financial institution in the nation. The Federal Reserve plays a crucial role in preserving the health of the economy. Its function is to strengthen and stabilize the U.S. monetary system through policies and regulations. The Federal Reserve was created on December 23, 1913 by Congress and signed into law by President Woodrow Wilson, known as the Federal Reserve Act. What does the Federal Reserve do? The Federal Reserve helps to regulate the financial markets by raising and lowering interest rates. An interest rate is the amount a consumer pays for borrowing money and the amount a lender makes from lending money. It's also money you earn from having a savings account in the bank or the money you pay for using a credit card. Raising and lowering interest rates help to maintain economic stability. If the economy is slowing down, the Fed may lower interest rates. Encouraging consumers to spend more on products and services. Encouraging businesses to invest more and hiring more employees, which also helps to create maximum employment. Lowering interest rates encourages more investing in the stock market and other assets. Lowering interest rates help to stimulate the overall economy. If the economy is moving too fast, the Fed may raise interest rates, making borrowing money and using credit cards more expensive. Raising interest rates discourages consumer spending and encourages consumer savings, slowing down the economy. The Federal Reserve provides guidelines and regulations on banking activities to ensure the safety and stability of the U.S. banking system. The Federal Reserve does not produce currency but controls the supply and flow of money through its policies, making sure banks and other financial institutions have enough currency and coins in circulation. The Federal Reserve does not work directly with consumers, but ensures that banks have the resources to meet the needs of their customers, so that consumers can deposit a check, use a debit card, transfer funds, and process electronic payments safely and consistently. The Federal Reserve maintains an effective and reliable payment system, improving the flow of money and credit throughout the country. It also monitors and protects the rights and credits of consumers and enforces consumer protection laws. The Federal Reserve is the bank for the U.S. government, maintaining the account and transactions of the U.S. Treasury. It also acts as a last resort emergency lender and a source of credit in times of crisis. The Federal Reserve System also conducts research on national and global economic issues. The Federal Reserve is guided by the Board of Governors, made up of 7 members who are nominated by the President. The Board of Governors report to Congress and oversee 12 reserve banks located in different regions throughout the United States. These 12 regional banks are responsible for managing the country's money supply.